One of the biggest challenges in 2023 in banking industry is how to maintain performance and profitability in the era of higher interest rates amidst the risk of global recession. So what is the impact on Indonesia's loan growth in 2023 as a result of rising interest rates and global recession risks?
Yeah, thanks for the question. So we expect the 2023 loan growth to be around 10 to 12% this year, which is roughly the same as what we have seen in last year. While there are, as you mentioned, there are headwinds in the form of rising interest rate and slower global growth, there are also tailwinds right now in the form of the ongoing recovery in sectors such as tourism and construction, as well as, most importantly, the reopening of China, which will provide that tailwind down there. And the loan growth in 2023, we think that it is going to be more broad-based with recovery in the earlier mentioned sectors, as well as in the SME customer segment as well.
Okay, but in the sectors that will become the key driver to boost Indonesian loan growth in 2023, so how is your point of view?
Yeah, I think in terms of the key sectors that will drive loan growth, it will still be in the corporate sector. And obviously in the corporate sector, the commodity companies will continue to drive the bulk of the growth. And obviously the consumer segment is where the growth will be ongoing as well, given that over the past 2 years there has been pandemic and we have seen domestic consumption recovery very strongly down there. So in short, the corporate and consumer will continue to be the key drivers, and at the same time we see some recovery in the SME segment as well.
Okay, but this is interesting to see as we know that even though the inflation in US is slowing down, but we know that the Fed will still continuing to increase its interest rate until its terminal rate, and so does the BI or Bank Indonesia to prevent capital outflow from this country. So meanwhile, we know that high rates and margins will support banks' revenues, but higher for longer rates will also weaken the ability to service debt. So how do you see this? To find the win-win solution between this?
Yeah, that's a very good question. But I think for us, our expectation is that the asset quality for the Indonesian banks will be stable, and we have 3 key reasons underlying that. Number one, while BI has hiked its policy rate by about 200 basis points in the second half of 2022, what we have seen so far is that the banks have been rather slow in passing on the policy rate hikes because of loan competition in the market right now. So this also means that the increase in lending rates have been modest so far and will likely remain so in 2023. Number two, commodity prices, in our view, will remain higher than pre-pandemic levels, supported by the lingering supply disruption, the ongoing Russia-Ukraine military conflict, and obviously right now by China's reopening. And palm oil prices in particular will also be supported by the Indonesian government's B35 biodiesel mandate. I have brought up commodity prices here because Indonesian banks have significant direct and indirect exposure to the commodity sectors, and the sort of the high price trend will support the asset quality. And last but not least, I think when we track the loans at risk within the banking sector, in fact, it has declined quite significantly over the past 2 years. Specifically, the level of restructured loans that are classified as performing have decreased to about 10% today from its peak of about 20% in 2022. And we expect it to fall further as more borrowers recover and pay down their debts.
Okay, so you mean that the banks in emerging economies like Indonesia may face pressure to keep lending rates low to support the economic recovery, just like stated by in the Moody's Investor Service report last year. And how about that? And how about the debt sustainability issue and the risk of higher NPL during this continuance of interest rate hike?
Yeah. So I think for the case of Indonesia, as mentioned earlier, the interest rate, the lending rates the increase has been fairly modest. One is because of the competition for corporate and the consumer loans. The other is I think banks are also still cautious in raising rates in the SME sector, which are among the highest, which were among the hardest hit during the pandemic. And I think another key point to look at is, when we look at Indonesia and also Southeast Asia as a whole, economic growth is definitely much higher, compared to the US and the Europe, which are facing kind of a significant slowdown and the risk of recession going forward. So I just want to highlight that, a part of the pace in terms of the lending rates, economic growth in Southeast Asia has been quite strong, and the countries have emerged on a very firm standing as well.
Okay, so how about asset quality outlook for Indonesian banks?
Yep. I think for Indonesian banks, we are expecting the asset quality will be stable. So I think as mentioned earlier, although BI has hiked its policy rate by 200 basis points, the increase in lending rate has been modest because of the competition in the market, and also because of the banks are quite cautious in passing on the rates to the SME sectors. And in the case of Indonesia, when we look at the commodity prices, which is a large factor in terms of asset quality, commodity prices will remain higher than pre-pandemic levels, supported by various factors such as the lingering supply disruptions, the ongoing Russia-Ukraine military conflict, and definitely China's reopening. As well as the local policy, in the sense that palm oil prices will be supported by the Indonesian government's certain policies such as the B35 biodiesel mandate. And last but not least, I think for the case of Indonesia, obviously the loans at risk, which has declined fairly significantly over the past 2 years, and we expect that trend to continue down there because of the economic recovery seen in Indonesia.
Okay, so what's interesting is how to see the liquidity in banking sectors in 2023, as we know that the outlook itself says that the third-party funds will be decreasing during this year, but on the other hand, we will see the increasing numbers of loans as predicted in outlook. So how about the liquidity in banking sectors during this year?
Yeah, I think that's a good question. Our expectation is that the liquidity will normalize. If you look over the past 2 years, liquidity conditions have been loose because of the central banks easing monetary policy, and also because banks have not been lending. And right now what we are seeing is a normalization of the liquidity condition, given that banks have restarted their loan growth, and in fact the central bank has also progressively increased the reserve requirement down there. So I think this year the liquidity will definitely be tighter for the banking system, but I will classify it as normalizing from very loose conditions over the past 2 years.